Hello traders, welcome to the weekly outlook and setups volume 301. Iliya here, and as always, you know what we're going to be doing, having a look at the markets, how they developed this week, what kind of setups we had, and most importantly, what we can expect for the upcoming week. So without further ado, let's check out the economic calendar and get into the technicals. Alright, let's check out the economic calendar. So on Monday we have a couple of speeches here from Royal Bank Australia, FOMC member, and then Bank of England. Okay, nothing much to be worried about, honestly. Bank holiday on Tuesday for Japan, but then we're having the PMI days. Okay, so we're having the French, German, then the Eurozone, then the GBP, and then the USD PMI. And then also we're having a Fed, Powell speaking. Okay, it's 7:35 p.m., a little bit late. So Tuesday, definitely a tradable day. Wednesday, Aussie CPI, okay. New home sales not very big for the USD, so maybe Wednesday can potentially consolidate a bit. Taking us into Thursday when we have the interest rate for the Swiss franc, and then we're having a lot of USD news. So Thursday, absolutely amazing day to be trading. GDP, unemployment claims, and all of these amazing news are gonna pop the market. And then even on Friday, we're ending up with some CAD GDP and also this PCE price index, which again, because inflation has been a very key economic factor to be monitoring right now, investors tend to really react to this news event. Okay, so looking like a pretty good week. Nothing like very big to be worried about, like a Fed rate, which is already out. This week we had the bump dropped. Okay, so right now we're starting to get some clear direction. PMI is great on Tuesday. Wednesday could be a little bit slow. Thursday, amazing news. Friday, amazing news release here. So I'm definitely going to be trading very likely every single day. So with that being said, let's check it out. Fanatics, I spent 1.5 months putting together the Fanatic Bootcamp that is designed to help you exit the break-even stage with just 2 simple tools and 6 hours of content. Now, if you have been loving how I analyze the market in the weekly outlook, if you have been loving how I trade and how I think about the market, this is really going to show you everything that I do for an extremely small price. So we're going to be working on your mindset first, fixing your mindset, your limiting beliefs, and exiting your emotional cycles. Then I'm going to be giving you the 2 tools that I use, only 2 tools, so you're going to actually know what I'm doing in these weekly outlooks. And then of course, I'm going to give you the process and the mechanics for it so you can actually build it into a trading plan. So if you're interested, first link in the description, click on it, and I'm going to see you on the other side. Alright, as always, we're gonna get started with a Dixie, and as I tend to be doing these days, I just want to actually do a little bit of a bottom-up analysis to pretty much go to see at my forecasts from last week. Now, of course, the DXY was definitely heavily bearish. We had daily bearish imbalances, hourly bearish imbalances. And again, I just said, well, okay, let's wait to see where the market is going to guide us. Is it going to start guiding us higher towards that high or lower towards this liquidity point and this liquidity point? And you can see the first thing that the market does on Monday, it breaks this low, okay, and actually closes below it with a very clear expansion candle, creates a hourly bearish imbalance. Then that is pretty much your signal, hey, we're shorts. And then the market dumped, and it dumped all the way down to this very major liquidity point here. All right, it took that out, and there we have pretty much the Fed rate. I think that was the Fed. We took the liquidity, and right now we are pulling back to retrace. Overall, amazing week to be trading Euro USD, GBP USD, because for example, gold really consolidated this week apart from Monday. Okay, and then we had a trade on Thursday and Friday. But this one massively trended lower, and then after this massively trended higher. So a very nice development. Okay, so if we delete everything right now and focus on, okay, what can happen next week? Well, this weekly candle right now is looking pretty strange, like a very massively crazy wick right now. Again, we didn't really break down to the downside to say, okay, we're bearish. Right now we're back into that range. Okay, do you remember this candle here? Right? Do you see any body break below that low? No, we just keep seeming to return back into this level. So there is a lot of sensitivity here within this area. The market seems like the DXY doesn't seem like it wants to drop below like here 96, let's say. All right. Now on the daily time frame, it's pretty kind of tricky. I would say we're getting a lot of bullish momentum right now. Now, can this daily bullish imbalance here signify? Oh, come on, why am I not drawing? Okay, there we go. Can this daily bullish imbalance signify that, hey, we're gonna reverse? No. Okay, because if you just zoom out a little bit, this is how I look at market structure. Okay, we're having lower highs, lower highs, lower highs, lower highs. This can just be another lower high, and just because we are having Let me actually try to use that one. There was a way to draw. Yeah. So just because, for example, we are having right now a daily bullish imbalance here, that doesn't mean anything yet, okay? However, what we can see is happening right now actually is we're having these daily bearish imbalances fail right now. This red line, this red thing is distracting me, but maybe it's better for you. I just discovered that one here, that you actually have a demonstration tool, okay? And with that demonstration tool, I can actually make like drawings. That could be nice. So these daily bearish imbalances we can see right now are actually failing. And based on my understanding, okay, this means that potentially that high is going to be weak. So I can already say daily, daily weak high. Okay, now is the market really gonna guide us there with something like this? We can definitely see that if we drop to the 4-hourly time frame. You can see right now, according to me, these daily bearish imbalances have failed right now. Why? Well, because we came in to react. Let me remove that thing. It's pretty distracting for me. We came into the daily, we reacted, and then we broke the reaction here. Okay, but then after we broke that reaction from the daily, we came into the upper daily imbalance, we reacted again, and right now we're breaking the reaction yet again. All right, so for me, these two daily bearish imbalances, I'm not going to look at them anymore because according to me, they have failed. There is a slightly bit of a lower hanging fruit right here. This is a 4-hourly swing point. The thing that I don't like within this very recent bullish push, it kind of originated from this 4-hourly bullish imbalance. It kind of did its job to take out this liquidity point. But then afterwards, we did not make any 4-hourly bullish imbalances. So I would have definitely loved right here if there was a 4-hourly bullish imbalance to then say, all right, we can be looking for something like this, but we don't. Okay, so getting to pretty much to my forecast right now, I think the market might potentially come to take out some liquidity just based on that very recent push, okay? But where are we gonna go long from? That is kind of the question. So if we do get any sort of pullbacks here, and then the market starts giving you some bullish order flow with bullish imbalances, then liquidity number 1, and maybe eventually liquidity number 2. However, we should absolutely be aware of the short side because the DXY is a weak currency right now. So just because we cut the rate, right? I believe this bullish move is just profit taking because everybody knew that the Fed is gonna cut the rate. Everybody knew and everybody sold on that, okay? And when actually this is the buy the rumor, sell the news, okay? We went down and then when the news came out, the market actually reversed. It was supposed to go down on the news release, but the market already priced that in, so it had to recover to provide some profit taking. Okay, so currently, of course, the other scenario will be, okay, let's say the market actually brings a lot of bearish intentions, but taps into that daily, and then maybe that daily fails, then that can potentially drop us lower into liquidity number 1. That is going to be right here. And then liquidity number 2 is going to be, again, these massive lows. Okay, but that is if that daily imbalance fails. Okay, but if the market actually pulls back into that daily imbalance and actually gives us, for example, bullishness, then again, we can still target the highs. So I'm giving you a lot of scenarios here, but again, nobody, I don't care what analysis you're doing, I don't care who you're listening to, nobody knows what the market will do when it opens, and is it going to go up, is it going to go down? Nobody knows. Okay, all we can do is we can just, for example, have scenarios like this and literally flow with the market. So this is my overall outlook. I like longs, honestly, but I'm not 100% convinced. I'm going to be convinced if the market makes a higher low and a higher high on the daily. So if it pulls back on the daily here and then it pushes for a new higher high, then if we start making bullish imbalances, then of course all these liquidity points can be attacked. But fundamentally, can we actually do that? Do we have economic factors to support like such a bullish push on the DXY? Not really. So I kind of think we might right now this might just be profit taking to potentially trap buyers, right? So for the sellers to resume their sales. So I'm going to be very careful in monitoring what happens Monday, Tuesday, and then I'm going to be flowing with the market. So that is the DXY. Let's see how the rest are looking like. EURUSD was an absolute monster this week. I had a member who was making 6 hours per day just on EURUSD. All right, just longing 15-minute zones, 1-hourly zones, all the way up towards this massive high. So again, of course, I give you scenarios. All right. Daily was bullish. I was very likely more bullish, right? I was bearish on the DXY. I'm more bullish on Euro. Daily bullish, hourly bullish. The market taps in and we kind of had a closure here on Friday. So again, we didn't get any kind of a hourly sign. So then we have to wait a little bit. You can see the first thing that the market does. You look and see, right? What did I want to see? I wanted to see a new hourly imbalance above that high. There it is. New hourly imbalance. above that high. What do you do then? You absolutely long the hell out of that market. Okay, liquidity number one got reached pretty much on Tuesday, and then we just absolutely rocketed. We reached this massive liquidity point here. That is a monthly swing point, and if you kind of go to look to the left, I think there was a weekly, kind of a little bit of a weekly liquidity right here that we also reached. All right, so that is a weekly liquidity. And yeah, and then pretty much you can also flow on the short side of things. You can see then the market made you follow bearish imbalances after that massive sell-off, after that massive buy-off, excuse me. Then you can expect, for example, the Fed rate to react in the opposing manner. You take shorts. He also took shorts. We had a lot of members capitalizing massively on EUR/USD. I'm pretty sad that I did not trade EUR/USD because I'm currently doing an experiment of trading only one pair, and that is gold. And gold did not develop amazingly this week. It's kind of consolidative. So we're back into that range. We massively popped and we massively rejected. So this weekly candle is pretty sketchy. And right now, yes, it's pretty tricky because we're just having higher lows. Higher lows, higher lows, higher lows. Right now, this can be another higher low. So the market is absolutely bullish. Okay. We're having a daily bearish imbalance that, again, as I told you on the DXY, that doesn't mean shit yet. Okay, it doesn't mean anything. Just because we're having a daily bearish, that doesn't mean this massive bullish market structure, the fundamentals, the bullish market that is right here is just gonna get invalidated like that. No. Okay, because I can definitely find a couple of daily bearish imbalances here, for example, one that you think, oh, we're gonna sell off, or right somewhere else, oh, here we're gonna sell off, and the market always ended up getting bought up. Okay. So currently we're tapping, for example, into this sort of a supportive level here, this sort of sell to buy, daily bullish imbalances. However, I see first signs of the market actually disrespecting these levels. So did we actually have two imbalances? Yes. Pretty similar to the DXY, we have daily bullish imbalances. The market tapped into one of them, reacted, but actually the 4-hourly took over, broke the reaction. Right now we tapped into the other daily, we reacted very strongly, but then we just still ended up rolling lower, breaking structure with a body even. And unlike the DXY, EU has a very little, okay, 4-hourly bearish imbalance here. All right, I type 5H, but we can't see it anyway. So is it going to sustain lower? That is my very big question. We're having a daily bearish imbalance. We're having 4-hourly bearish imbalances. The daily bullish ones are failing. So this right now, for example, can unlock all of these liquidity levels. Liquidity number one, liquidity number two. This one all the way down, I don't know, right? Where is the actual origin? Well, the origin of that daily push that right now is turning out to potentially be weak, but we don't know that yet, is this low. So that could be the ultimate, right? The ultimate liquidity target that we can have. But I would suggest we go for the lower hanging fruits that are going to be these two, not to forecast a full-blown reversal, okay? So I would say, well, I am currently a little bit more bearish. I don't want to be bearish though. I'm very scared right now to say bearish because, again, I never do forecasts like that. I trade just by flowing with the markets. I don't care where it's going to go next week because I'm going to flow with it, right? But I can say, for example, something like that could be pretty nice, pulling us back into that 4-hourly, giving us some bearish order flow, and then attacking the liquidity, okay? It can, of course, just continue to go lower as well. That will be also nice. If that selling pressure is going to continue, we have a lot of PMIs on Tuesday, so maybe that is going to determine what happens. But please, be aware also of the longs. Let's say the market taps and reacts and starts guiding us higher. Be aware of the longs because EU is long, DXY is short. That has been the overall bias for a lot of time. And it's not going to take the market just one single daily bearish imbalance to invalidate all of that massive bullish structure. We took out some massive liquidity, by the way, so maybe it's time for us to maybe get a little bit of a dip like that, for example, or maybe like a little bit of a pullback like this. This can definitely happen because here you can see the market printed daily, respected, then it printed another daily, it got respected. We just have to see. We have to see if that is going to be the case right now, but we cannot say it currently because that is the very first sign of a reversal. So I'm going to be very careful next week to pretty much answer the question, are we going to get a deeper pullback into this ultimate liquidity and into these lower hanging fruits, or are we going to just pop higher, invalidate this daily bearish, and then get, for example, some good opportunities towards swing high number one and swing high number two? Let me know in the comments what you think about EU and the DXY. Do you think we're going to reverse a little bit and give a deeper pullback, or do you think we're going to resume the uptrend immediately? GU was a very interesting pair this week because at times it was a lot stronger than EU, then suddenly EU got stronger, and then suddenly GU got so much weaker than EU. It kind of constantly kept changing, okay? Like on Monday, this one was the first one to take out the liquidity, while EU still had, for example, long opportunities. And then this one absolutely dumped like crazy after the Fed rate. EU, you can see EU, like it didn't have that much of a massive break, right? It was a lot more corrective. So basically, again, the scenarios, everybody, right? What is the market gonna do? Are we gonna break above? So then here, I kind of forecasted a short. Why was I so short? Like you can see, this is why, again, guys, just no freaking expectations. Did the market break above all of these highs with the body? Yes, it did. Did it make a fall imbalance? Yes, it did. Okay, why did this imbalance didn't get retested? Because it was a breakaway gap. What potentially got retested? Something on the 1 hour here. You get your longs and you continue longing here. 1 hourly bullish, longing here. 1 hourly bullish, longing here. Then the market consolidates, taps into a flower. Do we have a flower here? Oh, we didn't have a flower. That sucks. News came out, bearishness, massive flush. Okay, so I think one of my members managed to catch a short somewhere here. Anyway, on the weekly time frame, we're getting a super crazy bearish candle right now. We did not go to take out that high. Okay, so that is very interesting. Daily time frame, what did we actually do is this was kind of the target that I managed to find out. This is kind of a daily swing point. That was a reaction from this daily imbalance, so a pretty nice liquidity point. And right now we're just absolutely dumping. Okay, I would say this could be a daily reaction area. Why a reaction area? Because I generally don't trade long from these levels. Now here we can see this daily reaction area actually caused the market to pop higher, but we don't know this. Is this daily reaction area going to do the same? I don't know. We are having an extremely massive daily bearish imbalance here. And also on Monday, after Monday closes, we might have another daily Tuesday. So that's how I'm going to type it. So I want to see a daily imbalance to be formed pretty much after the Monday closure, then to see if we can continue lower, because this candle here is a massive bearish expansion candle. This makes it a very high chance that we're going to have a daily bearish imbalance after Monday closes. And if we have this, I'll be definitely curious to be taking shorts, because look at that massive momentum. What is left to targets? Pretty much this low down there, and then below that low we have actually a couple of imbalances that are not retested, so we can be looking into them. We also have that massive quality bearish imbalance to potentially push price lower, so I will be looking for something like this. Okay, I don't want to be calling shorts, but looking at that massive flush, I like shorts. Massive momentum, but again, it's just the first sign, everybody. Like the foundation of market structure and a confirmation of order flow is to have, for example, if you're having an uptrend and then suddenly you have a drop, that is not bearish, even if you have an imbalance. Bearish will be if we make a lower high to confirm that the sellers are actually stepping back in and you get another break of structure. Okay, so currently what we're getting on EU and GU is just a drop. Just a drop. Okay, so if that drop is actually going to do something, I need to see the market pull back. Lower high, lower low, and then from there I can start maybe even looking for the lower liquidity points. Okay, so the main highlight for next week is to see a confirmation that this Fed kind of result after the Fed is actually going to sustain. Okay, so that we're gonna see if the market pulls back into that quality, or if it makes a daily and then it pulls back into the daily, gives us entry signals, then for example attacks for a new lower low, and then below that lower low we can be looking for potential trades like that. Okay, so that is GU. I like it even more for shorts. So if next week, for example, the DXY is gonna go long, currently GU is absolutely weaker than EU. So if you're gonna be picking a pair between EU and GU to short, well, it better be GU at this precise moment. These things tend to change constantly. At time, GU was a lot stronger going into the highs, but then it was so much weaker than EU going into the lows. It always changes, so you always have to be in the flow of the market. So that is GU, quality bearish zone to actually short from, daily reaction area that can cause the market to react a little bit, pull us back here. I'm going to be looking for shorts. Of course, like the long scenarios is going to take a very long time, like tap in here, react, tap in here, react, go right there. So this can probably happen all the way until Thursday, which I cannot forecast. So maybe I'm going to do a flow with the markets Wednesday if the market is looking good. So that is for right now. Let's keep carrying on. All right, Aussie dollar. Also, we kind of had this hourly bearish imbalance here, but again, as I told you, probably the market structure is just absolutely bullish. So why would you kind of take a short? The market immediately invalidated this hourly bearish imbalance on the market opening, okay, and then it started guiding us higher. But yeah, you can see, for example, GU massively running above, EU massively running above. This one, meh, didn't do much. Okay, so these kind of pairs, I don't like them. But yeah, we kind of reached out the top, we manipulated again, and right now it's starting to get interesting because we're getting a very massive wick out here. We're also coming to sweep this high to the left. And we are invalidating a new weekly bullish imbalance. So that is a very bearish sign, by the way, because after this candle, we can definitely say, okay, maybe the buyers are starting to take in. We might have a weekly bullish imbalance to go for the skies, but no. We absolutely invalidated this one. And again, similar to the rest of the majors, we're having a daily bearish imbalance. The most recent target that we have is going to be this low, okay? And then below that low, we don't have anything all the way down here, so we have to refine it. So are we going to pull back here to get a short? Let's see. Hourly time frame. Hourly time frame, I don't like it because unlike GU, for example, in EU, this one does not have a hourly bearish imbalance to say, okay, we're not going to pull back into the daily because we have a hourly bearish here to potentially push the market lower. Now, the market can definitely push without anything, so we don't need to have a zone, okay? Although, like, usually you're gonna get a zone. So for example, here, like, the market was chopping, but then it massively pulled back where into the imbalance, and then it flushed from there. So we could potentially pull back into the daily, although, like, it's a lot of space, it's a lot of distance to travel here, and then it's gonna be a lot of distance to travel back down there. But that can be something that we can be looking for. And then, of course, another thing is maybe the market kind of opens up, massively breaks below imbalances, and then, of course, we can start looking for these low-hanging fruits right here. So I am in a very good mood today to be calling shorts on these majors, just because we had, again, that daily bearish imbalance. Everybody, please, it doesn't mean shit yet. We need to wait for the pullback, we need to wait for a lower high, and we need to see if a lower low is going to be made, because the market can very easily come into the daily, react, and then break and start making an uptrend, okay? And then we're gonna know, oh, all right, the buyers are back into the game, so we gotta take some longs. So again, always have two scenarios. If I can give you one tip, right, and one thing that you can learn from these outlooks, right, it's not about forecasting and being one-sided. Oh, it's gonna go down, it's gonna go here. You don't know, all right? Have the two scenarios. What would you like to see for the shorts, and what would you like to see for the longs? And even that is way too much forecasting. Just wait for the market to open, wait for it to guide you where it wants to go, and then you're gonna follow it. Trading is that simple. Okay, so that is Aussie dollar. Two scenarios. I am, of course, preferring the shorts because of that massive selling pressure, but I want to see it get confirmed first. So there was not a lot of power within these Asian currencies, because you can see also NZUSD, it kind of was a little bit weaker, and then it came into that fall and chop, and eventually it came to take the liquidity, and eventually it also came to take out that high here that we drew. And then after this, we have an absolutely bomb reversal. Okay, so there is a lot of weakness within these pairs that also kind of suggests that, hey, is EU and GU also going to flush, because we see Aussie dollar and NZD dollar being extremely weak. So let's see. Weekly candle, just absolute destruction right there. I can already say it's looking pretty good to go and attack that low. All right, but let's take it one step at a time. Going on to the daily time frame, we're having a massive daily bearish imbalance once again, coming after a massive sweep here. And you can see how sluggish the market was on the way up, right? Chop, and then we just took out that liquidity and then just boom, it just unlocked, right? Lower hanging fruit here, lower hanging fruit here, all right? And then we drop to the hourly time frame. Do we have a hourly zone? No. We have one here that already got tapped and pushed. Yeah, I mean, it's getting pretty close to these kind of liquidity targets. So is it just going to carry on towards them? We have to see. I mean, everybody, this can develop in so many different ways. We don't know. It can decide that it wants to pull back into the daily and give us the shorts. That will be great. It can just make a slight pullback and just attack the lows. That will be great. It can, of course, come into the daily, react, and start breaking. And, of course, if the buyers resume, that is going to be the long signal, all right? Or, of course, it can just, for example, consolidate and do nothing, okay? We do not know. So I would say, again, across the majors, I got that main impression that we're having a lot of bearishness starting to kick in. However, it is just a singular massive, for example, profit-taking move. Is this going to sustain? Are really sellers going to enter? We're going to know if these daily bearish imbalances hold, if the market is making new daily bearish imbalances, if the market is making new hourly bearish imbalances as well. And I want to see a little bit of structure, because currently we just have like a one-sided move. I need to see a cleaner lower high, right? I need to see something like that, cleaner lower high, something like that, cleaner higher low in that case, right? And then to see that the market is actually going to respond from it and respect it. All right, so that is NZUSD, very similar to Aussie dollar, but actually it looks a lot weaker than the Aussie dollar. This one a little bit more conservative. This one is just absolutely dropping, getting us very close to all of these liquidity levels. So let's see if that bearish pressure is gonna follow through. All right, let's check out gold. So I am unhappy with myself of how I traded, probably even in the past 2 weeks. I am missing a lot of profitable setups. That is my main problem right now. It's a little bit a combination of having expectations as well, which is something that I always try to tell you not to have expectations over the market, or just thinking that gold is not gonna do this. It's kind of impossible, but then it just always it proves me wrong. So I wanted to take a long on Monday, exactly after it took out that liquidity, but again, it looked like a sweep to me. The 1 hour time frame rejected here, and then the 50-minute zone, for example, was not amazing, so I missed on that long. And then I missed on the win on Friday. I also missed on I actually took a stop loss here on Thursday, trying to chase it after liquidity was taken. So I'm having a little bit of a very nice learning curve trading gold, because gold is something that I was scared of trading for a very long time, and right now I transitioned to trading only gold, which includes a very nice learning curve. Okay, so definitely getting there. But let us get to the analysis pretty much right now. So weekly bullish imbalance was created. The market is absolutely ripping. We're having a sweep of the previous weekly high, so we're getting a little bit of a kind of a slowdown. Getting into the daily time frame now, my price action here, gold futures, is gonna look a little bit funky right here. But basically, the forecast was here at the middle of the week is that we have this daily bullish imbalance, and that daily bullish imbalance originates from this daily swing low. And we came into that daily bullish, we reacted, we took out the liquidity, okay, and then we broke that reaction. So after this, of course, the bias for me and my team became bearish towards that low, and I couldn't trade towards that low. Missed it, right? And then on Friday, the market actually ripped higher. There was a trade that 2 or 3 of my community members took and capitalized on it. I again was in an overthinking mode on Friday, so I didn't take it. So having these, of course, I'm not losing, but I'm skipping a lot of the winners. We had like a 45-minute webinar this week in my community talking about this, because we all learn together with me. So weekly bullish, daily time frame not giving us a lot of value, but we actually had that little bit of a dip right here. And then the market is right now, you can see on Friday, giving us a lot of bullishness. In fact, it's actually closing with a 4-hourly bullish breakaway gap. It took out that liquidity, it closed above it, all right? And right now, pretty much all-time high is the next pretty much stop. If we see EU and GU and Aussie dollar and NZD dollar right now continue to decline, gold potentially can go higher, because that is when uncertainty maybe kicks in and stuff. That is when it can go higher. But also if EU, GU and Aussie dollar and NZD dollar are dropping, that means DXY is going to go up. But if DXY goes up, that means gold should potentially go down. So it's pretty 50-50. It's a very mixed kind of instrument. Anyway, we don't have any bearishness to potentially stop the market towards all-time high. So my very key question right now is, are we going to get a deeper dip into the weekly, or are we just going to continue carrying on? Like, if this was a live market right now, I will definitely be looking for a long, something like this. I would even be dropping onto the 1-hourly time frame, and you can see on the 1 hour here, we're having like that imbalance to just continue going higher with it. Okay. So that is gold overall. It offered an amazing setup. Where was it? That great setup that we had. It was here. All right, that imbalance here just above the Asian range high. The market popped. I hesitated on taking it, but my members, for example, took it. It was a beautiful 1.5 hour here, and you can see it even continued for a lot more. So very bad trading for me this week. I didn't lose. I'm actually sitting profitable with my futures performance. That was good. But on gold, not very happy. So when it comes to outlook here, I can say, well, exactly what we happened here on the Friday. I would say this to me looks extremely good. Pull us back into that 4-hourly, make a higher low, and then potentially continue. The market is overall long here. We had a little bit of a dip. We haven't mitigated a weekly imbalance. Okay. But if, for example, the 4-hourly, the 1-hourly, and the 50-minute continue to go higher, I will go higher with it, because currently there is nothing to stop it. That weekly, that 4-hourly imbalance here is taken, reacted. That liquidity is taken, we broke above it. And then literally the next thing is this wick. I mean, within that wick, you can draw like a 50% or something where the market can potentially stop you. There is nothing on the 1 hour. On the 1 hour, maybe you can take, for example, this order block here that is also taken. So there is nothing to stop the market for running new all-time highs. So I'm going to get focused on potentially trading towards all-time highs. But guess what? If the market taps that hourly, reacts, breaks, and starts giving me the bearishness, I will be the first one to be short because I'm very good with flowing with the market. All I have to do is just execute a little bit more consistency and not overthink too much. Okay, so that is gold. I am long biased based on that development on Friday. We're having a breaking structure. We have nothing to stop us at all-time highs. So let's see if it's gonna reach it, and if not, we're gonna see the only thing that can right now push it higher get invalidated. And if that hourly bullish imbalance gets invalidated, that is gonna give us the bearish signal to potentially start targeting the liquidity on the bottom. USD/JPY had some good setups this week. Some of my community members that are based in Asia or in New York, they trade your USD/JPY. So again, two scenarios. Let's see where the market is gonna guide us. We had a hourly bullish, but then we had a 1 hourly bearish, and then the market actually failed that hourly bullish. We can see the failure right here. Even the first thing that actually Friday did here is break that. I mean, the last thing that it did is break. And then we just started getting some bearishness, right? So you can be looking for shorts right here. And then as we took out this first liquidity point, the market, what was it telling us? Hey, I'm short. Hourly bearish imbalance, you trade into this low here. And then after that low was taken, we have hourly bearish imbalance, then trade into the new low. All right, so two beautiful short opportunities. And you probably could have even found something within here, within the open, because when this hourly imbalance failed, and we see the sign that it failed, that unlocks this liquidity. Then hourly bearish imbalance, nothing to stop it bullish. We unlock this liquidity. Now, yeah, so pretty good development. Now, if we delete everything and we just go back to the weekly time frame, it still looks pretty crap, right? Still looks pretty crap. We came to sweep that low, massively bullish rejection, dropping onto the daily again. So similar to all the majors, we're having that daily imbalance. And again, my main question is right now, okay, like, is this going to sustain? Is it going to persist? We're taking a daily swing point and we're having a daily bullish imbalance. And on the hourly time frame, yeah, it looks pretty bullish. We took daily liquidity and then we just ended up the week by taking out this hourly liquidity. Was that a previous daily high on Thursday? Yeah, so previous daily high. So we don't have any hourly bullish imbalances right now to say, okay, we can pull back here and continue. We have that daily below us. So in this case, it's just, again, it's impossible to predict what is it gonna do and what is gonna happen. We don't have any zones. We don't have any kind of clue right now what can potentially happen. All we have to do is, for example, think about the scenario. Scenario number one is going to be for us to pull back into the daily and then get the longs, attacking liquidity. Scenario number two is going to be, okay, we're bullish, we're breaking above with imbalances, all right, and we just continue higher. And then of course scenario number three is going to be, we tap that daily, we react, and then we invalidate that, and then of course we can start heading lower. Okay, so this is my bearish scenario, and these are my two bullish scenarios, and the market can end up doing something absolutely different than that. All right, but of course, if we start going into the long side, you're gonna have these sort of liquidity points right here, right, that the market can potentially take. I am more longs again. I really like that sweep, but according to me, again, that is some sort of a profit taking. But honestly, exactly, USD/JPY has been extremely choppy, so we kind of come from the downside, and right now we can expect the upside and then maybe back down. So I do like the longs, but we have to see if the DXY is also going to persist with the longs. So of course we have to be very observant at the start of that week and carefully evaluate, is that daily bullish imbalance that we have across the whole board actually going to sustain? So that is USD/JPY. I'm more bullish. I'll just be waiting for the hourly zone to potentially guide me towards where it wants to go next. Let's quickly check EUR/JPY. So this one was very mixed up. I remember it had like a daily bearish imbalance, but again, just because we have a daily bearish imbalance, that doesn't mean the market is going to reverse. This is what I'm currently telling you for that daily imbalance we have across the whole board. Here we had a hourly bullish imbalance that kind of failed, okay? But what I wanted to see here is, you can see, I wanted to see a hourly bearish. Did we get a hourly bearish? No. Okay, we didn't get that. And then the first thing that the market did after the market opened, you can literally do that. You can wait for the first imbalance on the hourly to form after market open. That gives you where kind of a very high chance sentiment of where the market could go. Hourly bullish formed. Bingo, retested, bam. Liquidity, I mean, this liquidity was taken. There is that liquidity we drew, and then there is the other one. Then the market made a pretty deep pullback here again. But did it make any bearish imbalances? It actually did. Okay, it actually did. But by the time we tapped into that bearish, we also made a bullish one. That gives us, again, the long signal because I only focus on the most recent ones. And you can clearly see the bullish market structure going from behind. Again, a bearish imbalance into a bullish market structure is a low probability imbalance. All right. And then the market popped some massive highs right there. I don't even know if there's something to the left. And right now, let's see what is going to be happening. On the weekly time frame, we don't get anything apart from a crazy rejection. On the daily time frame, we're just not making daily imbalances, which makes things pretty kind of tricky. All right, we're taking liquidity again. Nothing on the daily, right? And then we drop to the 4-hour, and the 4-hour is giving us some bearish signs. Like we had a bullish here, the market tapped it, actually fulfilled the objective by taking the liquidity. And then from there, we have right now a bearish one. Okay, a bearish one. However, pretty much we attacked the origin of that bullish imbalance that failed, so that is attacked. And the next, for example, is going to be all the way this low, but of course the low hanging fruit is going to be this low. All right, so where are we going to go from here? Where is the market going to guide us? We don't have anything on the 1-hour, and on the 4-hour we have the first sign of kind of a reversal. But again, a bearish imbalance into a bullish market structure is not amazing. Right now we have taken some big liquidity again, but what I want to see is, again, where is the imbalance is going to guide me? Are we going to get, for example, bearish imbalance here, very nice, to start targeting all these lows, okay? Or is the market going to pop higher into that quality, react, and then break it and give us entry models in the lower time frames to start taking out, for example, these highs? So those are going to be my two situations. I literally need to see where the market is going to guide me. Of course, I can always have a preference. So my preference would, let's say, be shorts, because I think the market might be too high. It might want to collect some of that liquidity. I do see the quality imbalance failing here and printing a bearish one. So I need to see, however, sustain, right? I need to see it sustain. I need to see a confirmation that, hey, sellers are actually starting to get into the market. So this is what I'm waiting for on EJ. Well, you know how much I dislike GJ and EJ, but here we go. So here again, like, I didn't have any clue what is going to happen here. I mean, it broke up, then it came back down to the actual liquidity, then it broke back up, and then it came back down. Like, what the hell? So weekly time frame, no clue again, just again part of that massive consolidation. Daily time frame, absolute crap, absolute chop. Now, are we gonna sell off? Are we gonna get a daily bearish imbalance here on Tuesday? Okay, so if we get the daily on, so yeah, that's basically gonna be on yeah, it's gonna form after Monday closes. We're having, like, for example, this break of structure right there. In fact, the trend change. The next liquidity target is going to be here. So, I mean, the very big question here is, okay, are we going to go short after all of that crazy chop? We could. I mean, we came here, we took out the liquidity, we formed full bearish imbalance, the market tapped, it followed through very nicely. So, in fact, here we actually have the quality time frame confirming a little bit of a reversal pattern, right? So, we have, for example, high, a higher low, a lower high, and then a lower low. So let's see if it's going to sustain. You can have all the liquidity targets, of course. There is a lower hanging fruit. Okay, that just got taken. There is also a very little quality bearish imbalance here. That is nice. So, I mean, looking at that bearish push, of course, it can definitely trick you into thinking that we're going to go short. Of course, sometimes it's going to go short, but you really need to see a lot of confirmation. So let's see, it pulls back here. It gives us some sort of an entry model. We can go lower, or let's say that this quality fails and then it takes us into the daily bearish that we might have, or the quality bearish here. Then again, see an entry model from here, continue lower. And then, of course, it goes without saying, what if the market actually starts going higher and gives us signs that it wants to go higher? So let's see, it's an overall extremely choppy pair. We have taken a lot of liquidity. This to me looks like a very nice manipulation here as well. So let's see if it's gonna keep carrying on. We already have a lot of confirmation here with that quality lower high being created and with the quality expanding lower and breaking structure as well. I will need to see the daily time frame to potentially print the daily bearish imbalance, because that is going to confirm that, hey, maybe right now all of these lows are gonna go because they're super flat. Okay, so let's see. I am more bearish bias. I mean, it's been for all the pairs, it's been a pattern right now looking at these daily bearish imbalances and saying that I'm more shorts. But again, I will definitely ensure I wait for sufficient confirmation that it's going to sustain. All right, welcome to the futures. We're gonna get started with the S&P mini futures. Here my drawings have moved. I don't know how, but I was looking for a daily imbalance and then a potential continuation. So overall, let's see what happened. All-time highs. The market just continues to drop. Continues to drop, continues to pump. I really wish it drops to buy more stocks. I actually did buy some stocks before that pump, but I wanted to buy more. Weekly time frame, absolute rip, creating a weekly bullish imbalance. So absolutely rocking like crazy. There was actually, so on where is it? We had this daily bullish imbalance. So that is probably what I had drawn. All right. The market actually pulled back into it, gave us a little bit of a dip, and then pretty much it rocketed again. There is no new daily bullish imbalance that was created. All right. And right now the market is just keep making all-time highs. All-time highs are pretty tricky, especially, wow, this one is it's not very bad, but it's a super tricky positioning right now. We're literally closing Friday at exactly a new all-time high. We don't have a daily bullish zone to work with, and we don't have a hourly bullish zone to work with. So currently, everybody, I'm sorry, but I've got nothing to say. We need to wait for pullbacks, and then maybe the market reaching all-time highs. We need to wait for expansions, and then to potentially target new all-time highs. We really don't know what is going to happen right now. This daily imbalance is already did its job. It imposed. So can we go down and take out some liquidity levels? So that is liquidity number 1, and that is going to be liquidity number 2. So something like this is something that I would imagine maybe to happen if we're going to continue with the longs. But let's see, or it can just continue imposing. We don't know, because at all-time highs, everybody, you're in no man's land. You just don't know. So they're going to continue to push price higher, but I always suggest have a little bit of a pullback. Wait for a pullback so that at least you have a good positioning of price, higher low, to target a new higher high. Because if you kind of trade right now, you are at a very big risk of getting a little bit liquidated to the downside. So that is ES, right? Nothing to say. Even like this 1 hourly zone, I'm not gonna trade London on a Monday, for example, but super bullish, super nice. I will be looking for any sort of bearishness here to give me a good position in order to immediately look to continue buying it, because right now we're in this kind of a bull market. Right now everybody's happy and this and that, so you keep following this until you are fully wrong, right? So currently the highest probably thing to do is just go long. All right, don't try to pick the top, don't try to do stupid things, just go long. Now I actually had a win on a short on Friday. It was a very quick in and out, but then the market ended up making all-time highs. But again, that is all depending on your trading plan. Well, Nasdaq as well. The tech index is a lot stronger here. My drawings, I don't know why they're down there, but on the weekly time frame, like, look at that pop. Like, it's just, whoa, massive rocket. All right. Weekly bullish imbalance created on Nasdaq. Daily time frame, we are having a daily bullish on Nasdaq, which is absolutely amazing. So the tech stocks, the tech index is absolutely doing a lot better. And on the hourly time frame, we don't have a hourly one, but it's great we have a daily, because this daily here, everybody, if the market pulls back into that daily, that is going to be an incredible long opportunity. So right now the market, again, taking all-time highs. It's a little bit too high. I wouldn't like to go on the 1 hour time frame and try to long it, although it can definitely continue pushing higher. So currently it's really outside of our control. There is nothing to the left to potentially target. All right. All-time highs, we have only a daily zone to work with. Below that is a weekly zone. Again, please do not say, hey, we're going to go to the daily and then we're going to go to the weekly. It will form a new hourly bullish. Actually, above that daily, I will follow that hourly bullish. So if it forms a hourly bullish here, I follow that. If that fails, then potentially we say it can go to the daily. Okay, so absolutely long buys here. Again, I don't trade indices. I trade, for example, Forex with these hard time frame zones, but I'm always aware of the hard time frame liquidity and the hard time frame imbalances, but I scalp them on the lower time frames. Okay, so that is currently how we're sitting. Massive all-time highs, massive optimism. Are we going to have a dip? Are we going to just continue pumping? The higher likelihood is that we'll just continue pumping. So any longs that you get, make sure to take them while the market is hot. All right, and finally, we're gonna check YM. Did we make all-time highs? Yes, we did. Finally, all-time highs on YM, on US30 as well. Weekly time frame expansion, we're not getting a weekly imbalance. All-time high just taken right now. Daily time frame again, so this one is a pretty sluggish index. It didn't have daily bullish, it didn't have daily bearish, it had nothing, right? And right now, it's just very slow and slow and slow. Like, look at this massive rip. Look at this massive rip. This one, meh. Wick, right? I don't like this index and I'm not trading it. On the hourly time frame, it's super mixed up. Here, there is the Fed day, massive whipsaw, came in to take out all-time highs, immediately rejected. right now, yet again, kind of made new all-time highs actually on a Friday, but no bullish imbalances on the hourly, no bullish imbalances on the daily. I really don't have any zones to work with on US 30. This is why I don't trade it, because this index is something's kind of wrong with that index, and the 30 companies that are inside, they're not moving great, right? So my favorite is ES. Very stable, very nice, respecting the zones clearly, not as fast as NASDAQ to massively blow your account. Yeah, this is why I am. 2 times made all-time highs, no zones to work with. You can of course drop your liquidity levels and potentially look for some sort of sweeps of that and then maybe new all-time highs. But yeah, YM, I just don't like it. It's pretty random, it's pretty choppy, so I focus on NASDAQ and ES. All right, DAX was super choppy here, getting us into the week. You can see no imbalances. It kind of went up and then it massively flushed lower. All right, took major liquidity. And right now it's giving us a little bit of a, is it a pullback? Is it a reversal? Let's see. Taking this liquidity, that's great. And on the daily time frame, again, we're getting that very first sign, again, similar to all the rest of the pairs that we just covered right now, the first sign of a potential reversal, okay? But for me, the reversal will be confirmed if we actually pull back into that daily and we make a higher high and we make a trend change. So that is the most recent structural point here. We're still making lower highs and lower lows, even coming from here. All-time highs, right? Lower high, lower high, lower high, lower high, lower highs right here. So that can just be another lower high. So don't, just because you're getting like that daily bullish imbalance across the pairs doesn't mean shit yet. Okay, for hourly time frame, we don't have zones. The market, yeah, just closed like that. So yeah, if we do have something like this and then the market starts guiding us towards that liquidity, this would be great. All right, that would be absolutely a great trade. But of course, if that daily bullish imbalance gets somehow invalidated, then of course don't be afraid to continue shorting, because that has been the recent trend for DAX. Okay, DAX currently doesn't seem like it's moving with the US indices. It's kind of getting a slowdown. It's getting like a little bit of a pullback. But again, this is kind of an instrument that is also an all-time high instrument, right? It's not like I don't know, like Euro USD or some of these currency pairs. Any kind of dip that you have here, you could potentially expect that it's going to continue. But currently, it's not linked to the US indices. But again, that could be the first sign that it might actually want to pop higher. So let's see if that daily imbalance is going to hold. Let's see if we're going to start breaking bullish structure. Because if we do, all of your amazing opportunities are going to occur pretty much within this area. When the market has confirmed a reversal, when you start having higher lows, when the market is actually bullish, that is when you can start targeting all of these highs, okay? So be patient, let's wait for it. First sign of a reversal, let's see if it works out, and if it does not, don't hesitate to go short into the liquidity low. So to recap a little bit, across the board, we're having that daily bullish imbalance or daily bearish imbalance, of course, that is forming within a pretty big trend, okay? Now, this is a result of the Fed, so is it a profit-taking thing, or are we going to get a reversal? That is the main kind of highlight for next week. So what I really want to see is how these daily imbalances are going to react and if they're going to sustain. So we're having a daily bullish on the DXY, we're having a daily bearish on EU, we're having a lot of sweeps coming from the top, and we're having a little bit of a bearish kind of sentiment introduced. But again, my main question is it going to sustain? Okay. Daily bearish imbalances here, the daily bullish are failing on GU as well, daily bearish, hourly bearish, the daily bullish are failing. So are we going to be making lower highs and continuing the sell-off? AU and NZUSD as well, daily bearish imbalance, but all of these are happening within an uptrend. So there is an uptrend on EU, overall uptrend on GU, uptrend on AU, right? Uptrend on OZ, NZUSD. NZUSD is actually on the downtrend, right? So that one is nice. Massive daily bearish imbalance here. Again, we just have to see how it's gonna play out. Gold is giving us signs right now on a Friday that it actually wants to continue immediately. We're having weekly zones below us. Now, is it gonna go and reach these weekly zones? We have no idea. The only thing right now to stop it is this hourly bullish imbalance. So again, if we tap in and continue, that's gonna be great. But if we fail it, then we're gonna be taking shorts. USD JPY also, we're having that daily bullish imbalance in an overall consolidation. So is it going to persist going higher? That is what we have to see. EJ and GJ the same. GJ actually looks a lot more bearish right now than EJ because GU is weaker than EU. So if you're on a short, then GJ is going to be better. But yeah, overall, that is the sentiment, right? We're having these daily imbalances. That is the first imbalance on the daily, right? So it doesn't mean much. Just because we're having a daily bearish here, that doesn't mean the market is absolutely going to reverse, okay? And indices, all of them are at all-time highs, ES all-time highs, no zones, NQ all-time highs with a daily zone, okay? And YM all-time highs with a pretty choppy price action. So here I'm going to be literally flowing with the markets, waiting to see what's going to happen and reacting. And of course, DAX took massive liquidity right now, and it's also giving that daily bullish imbalance. So is it going to sustain or is it going to fail? We're going to see. So let me know, traders, how you performed this week. Are you happy? What trades did you take? And let me know what you think about the market going into the next week. Let me know how you think that the interest rate cuts are going to impact the market long term. Do you think that this bullishness here is going to sustain, or do you think it's just profit taking in order for the market to launch the next move down? Let me know what you think, and I'm going to talk to you in the next outlook.